Hey, Bulls and Bears, a fifth bank just failed here in the United States of America. We're going to get into that and some more. But first, Kansas Heartland Tri State Bank closed by FDIC. Now, I've always said here there's going to be more bank failures after we saw the three banks that fell back in March of this year, 2023. So this is no shocking event. This is no surprise. And in fact, all the banks are insolvent when you look at how much money they actually have held in reserves. But we know that the ones that survive or the ones that stay afloat are going to be the chosen ones, so to speak. And it's not just me saying that anymore. Even the Treasury Secretary came out and said certain banks are going to be too systemically important. I'm trying to paraphrase on what she said here, but basically there's going to be a choosing of which banks stay afloat, which banks get taken over, go into receivership, etc. here. Let's talk about this bank, though. Heartland Tri-State Bank of Elkhart, Kansas, failed on Friday with the FDIC Insurance Corporation taking control. That's the fifth bank this year in the United States. FDIC agreed to assume all deposits of the Heartland Tri-State Bank to protect customers, entering a purchase and assumption agreement with Dream First Bank of Syracuse, Kansas. So we're seeing banks merge, buy out other banks, even banks rescuing other banks, right? Because you have the ones that are going to be propped up no matter what. So then they just go ahead and rescue some of these smaller banks or take them over. That means 4 branches of Heartland Tri-State Bank will reopen as branches of Dream First Bank on Monday. So basically they're rebranded. So we're starting to see these bank failures happen every 2 months. Of course, it started in March. 2 months after that, we had First Republic Bank, which was the second largest bank failure in the history of the United States. That happened in May. Here we are now in July, and we've got this fifth bank falling. So will we see another one before the month is over? Will we skip a month and see another one in September? Is the frequency of the bank failures going to get worse? Please let me know what you think down in comments. But when you just look at the dollars and the amounts in deposit versus how many dollars they have loaned out, all the banks are insolvent right now. And even if they had the dollars in there, this is just digits on a screen. This is not even real money. I mean, of course, they made it legal. Just like if you could make all the rules yourself, and said, okay, whatever I type into this calculator, that's how much money I have. If you were the one making the rule and you allowed yourself to do that legally, then you would have all the money you can just type up. That's what they've done for themselves. They can just type up trillions of dollars at the click of a mouse. Banks loaning out money they don't have, digits on a screen, and people are in debt for life. The US dollar has lost 85% of its value since the 1970s when the dollar was decoupled from gold. And the government seems bent on continuing the tradition. From now until the next elections, the government can print as much money as they want. The last time they did that, inflation went up 9%. This means one thing: the security of your future and your family's future is all in your hands. Make sure you freeze the value of the wealth that you're holding. Invest in gold with Noble Gold Investments. Gold is the one asset that is proven to withstand recession, inflation, and just about all other economic threats. Noble Gold Investments is here to help you if you want to invest in gold. You'll also get a 24 karat quarter ounce gold standard coin for free. Go to bullboomgold.com now. That's bullboomgold.com. Link down in the description of this video. Noble Gold, the only gold company that I trust. There's always a risk of investment and there's no guarantee of any kind. So what about customers that owed money to this bank and the other banks that fell? Yes, you're still going to have to pay back your loan. It's not a get out of jail free card. Something just fell down over there. It's not a get out of jail free card. Quote, you should continue to make payments, including escrow payments, as usual. The terms of your loan will not change, unquote. That's what the FDIC said. So basically, the loans just don't vanish into thin air. They get bought up by other banks, in this case, taken over by another bank. So you're going to be making payments now to a different bank, the same as or similar to when you buy a home and you get a mortgage. Most of the time, or a lot of times, that mortgage is sold off and you end up paying your mortgage to a completely different bank than when you started with. All right, let's move on here to some other news. The extreme bubble in stocks will end in tears. And that's not me saying that. This is an article here out of Business Insider. And who's saying that? Well, this is a investor, John Hussman, an asset bubble expert. Of course, they're all experts after the fact. But he's making a prediction here. Is he right? The extreme bubble in stocks will end in tears with the S&P 500 plunging 64%. A longtime bear who called the 2000 and 2008 crashes has warned. It's interesting when you read articles. I've read hundreds of articles now that say, oh, this guy's an expert. He predicted the crash. He predicted the crash. So there are hundreds of people predicted the crash apparently. But before the crash, I remember before 2008, hardly anyone was predicting a crash. Not anyone in the news anyway. There's a couple people out there like Peter Schiff and a few other kind of bearish people out there. But now I've read probably hundreds of articles now that say, "Oh, this person, predicted this, predicted that." I didn't see that at that time before the housing bubble came down. Not too many people were predicting it. More people that I talked to just in my personal interactions predicted it versus the people on the mainstream media and on the business news channels, because people, just everyday people, saw that home prices were actually just outrageous. And that was back then. Right now, it's even worse. This thing is being propped up. People are wondering, how they can do this. Well, remember, we had a lot of these 1% loans come out, last ditch efforts to keep this bubble inflated. And yes, they've kept it inflated longer than most people expected. I was one of the few people here that said the housing market was not going to crash in 2020. And of course, what do we see? We saw home prices actually do the opposite. They went up because people couldn't get foreclosed. We had all these stimulus checks, record amounts of money creation, and record amounts of money handed out to people. Of course, savings surged. People had more money. People went out and bought things. They bought homes. They bought cars, expensive cars that they normally would not have bought, because even the loans that they were giving out, they were counting the income of the stimulus as actual income, which is, it's not long-term income. So why did they do that? It's completely silly and ridiculous, but that's what happened. Now, speaking of insanely high car prices, let's talk about this here out of CNBC, how the world went from a semiconductor shortage to a major glut. So apparently there's a glut of semiconductors out there. So shouldn't we start seeing a lot more vehicles being manufactured? And if not, why are they not manufacturing them? Is that because they see, these car makers, do they see that the consumer, most people or anyways, are tapped out, and the pool of buyers for these overpriced vehicles have pretty much dried up, especially now with the rates much higher, right? So we should see stories about car plants are putting out record amounts of cars to make up for the lack of production that we saw over the past few years, ever since 2020. But we're not seeing those stories. So looks to me like they see the writing on the wall. They know we're starting to head into the late innings, of this economic boom, which is an economic boom based on money lending and people borrowing money and going out and spending money that they don't have. But when people have too much money to spend and there's not enough people making things or offering services, then you see rising costs of living. And that's, of course, what we saw here over the past few years. Now, markets have been in the green here a lot over the past few weeks on optimism that inflation has slowed down, and it actually has slowed down. But when it's still up 3% year over year, that's not good. So when prices are in a bubble, do you want prices to go down and have things become more affordable? Or do you want prices to go up even though they're going up more slowly? Of course, you want prices to go down. If things are unaffordable, rising prices are not good. So this 3% inflation, regardless of how bad it was before, how much worse it was the year before, it's still not good. But yet that's the optimism for the market. That's what's causing the market to go in the green. It's what we're being told here, out of the business news networks. All right, let's talk about home prices here. Starter homes basically are extinct. That's what one market analyst said there. Quote, buyers searching for starter homes in today's market are in a wild goose chase because in many parts of the country, there's no such thing as a starter home anymore. Unquote. That's Sherahair Bakari, Redfin senior economist, she recently said that in an interview with Bloomberg. So starter homes are non-existent. People need home prices to come down a lot faster and a lot harder than they are. A lot of people that bought their homes, especially at super low rates, are holding on to them. The question is, as the economy continues to deteriorate, can I say the word? How many people are going to be able to hold on to their home as we see more layoffs and more hard times hit more and more household? Speaking of layoffs, let's talk about uh, big layoff announcements here. Yellow Freight begins laying off. That's a Kansas City area company as they prepare for bankruptcy. So more bankruptcies. We told you it was going to get worse. It's not going to slow down. Things are just going to continue to accelerate from here. This company was one of the nation's largest trucking firms, and it's going to file for bankruptcy protection with at least 22,000 employees nationally losing their job. So out of these 22,000, I wonder how many of them own homes. I wonder how many of them took out a mortgage just in the past few years. And, what are they going to do now? It's interesting. We can take out a mortgage for 30 years and they look at your job history, but how do you know you're going to have a job for this whole 30 years? So you better hope and pray that home prices go up. That way you can sell for a profit when you lose your job. Because even if home prices are stagnant, you're going to be in big trouble. Once you lose your job, if you don't have enough equity to pay all the commissions and all the costs associated with unloading the home. And also, when a trucking firm fails, what does that say for the economy? I mean, the heart of the economy is people buying and selling stuff. Um, and the trucking industry, of course, is an integral part of that because they couldn't get supplies on the shelf. So what does this say? I mean, we're told on one hand that the consumer spending is strong and, people are spending more money. That means everything's fine. But yet one of the largest trucking companies in the United States has to file for bankruptcy. So please let me know how that works. To me, I think this is revealing the truth behind the real economic situation. Speaking of high home prices and unaffordability, let's talk about what's happening in San Diego. Homeless camping ban takes effect this weekend here in San Diego. So they're starting to clean up, and I shouldn't say clean up, they're starting to relocate some of the people. Well, they are cleaning up, but then it's just going to cause an eyesore somewhere else. But basically, they're moving the stuff there, the homeless people's encampments, to different areas. Some people say that they should just arrest these people for being on the street. Well, that's probably what a lot of them want. You get a hot meal and you get a roof over your head, you're in jail. But we don't have enough room in the jails for all these homeless people. And homelessness just gets worse and worse and worse each year. Here's something interesting here. This is out of the Los Angeles Times. Anchorage, Alaska mayor proposes sending homeless people to Los Angeles this winter. Well, the weather's better. Imagine being homeless in Alaska. That's a nightmare I don't even want to think about there. He's giving people a one-way ticket to warm climates. Well, it's not a round trip, so it's not just because of the weather. If it was for the weather, then they should have given him a ticket to come back during the summer. But it says here, out of both AP and Los Angeles Times, this was a one-way ticket. So this is a mayor who looks like he's just trying to relocate the eyesores, kind of like they relocate the homeless camps. He's trying to just relocate the homeless from his city, is what I see out of this. Out of Fox 5 Los Angeles, Culver City, here in Southern California, Culver City turns parking lot into tent village for homeless. Well, at least they have a place to park or a place to camp. Imagine how hot it's going to be, though, the pavement. Have you ever walked on pavement on a hot day, on a hot sunny day? It gets hot. At least find a field for these people. I mean, parking lot, I guess, is better than being on the sidewalk somewhere and having the business owner, spray you with the hose, like that one video we played last year where the business owner came out and sprayed that homeless person. That was a pretty sad story. So that's what Culver City's doing. Entire parking lots now turned into homelessness. I was just at Walmart earlier today to pick up some pots for some plants, and at least 3 motorhomes in the parking lot, and it looks like they had, things sitting outside the motorhome. They weren't just stopping to go shopping. It didn't look like they almost had a camp setup, is what it looked like to me. And we see that all over the place. A lot of parking lots here are filled with RVs and campers. Not filled, but you see a lot of them just hanging out for days in certain locations. And from what I hear, Walmart's one of the businesses that's not going to forcibly remove these campers. They're not going to remove these RVs or tell these RVs to leave. Now let's talk about credit cards and credit card debt. It's one of the main factors that's going to hurt tens of millions of people. It's going to hurt, I think, a majority of the population, because most people are in some sort of debt. And the backbreaker is that 20-something% APR if you can't pay off your card each month. That's the straw that broke the camel's back in some cases financially for people. Go banking rates, jaw-dropping stats about credit card debt in America. 30% of Americans have credit card debt between 1 and 5,000. 15% have $5,000 or more in credit card debt, and about 6% have more than $10,000 in credit card debt. Imagine having $10,000 in credit card debt. And if you are paying just a minimum payment each month, unless you have a introductory APR or a 0% APR, you're still paying a lot of interest. If you can make more than the minimum payment, that's good. But still, with that 20-something% interest, wow, that's really going to hurt you financially. So at some point, the pool of home buyers has to dry up even more now than it already is. We've got student loan payments resuming here in the very near future. Prices are still going up, even though they're going up more slowly. And it's just going to be harder for people. Just because prices are going up more slowly doesn't make it any easier for everybody, because things are unaffordable already. We need falling prices. We need a correction. We need deflation. Many people are waiting for a crash. Many people are sitting in cash waiting for the crash. It rhymes. Sitting cash, wait for the crash. That's a lot of people's strategy, but it's getting harder and harder to hold cash. If you want to sit there and not pay off your credit cards, of course, then it's easier to hold cash, but you're going to get eaten up by interest charges. So paying off your credit cards in full each month, or being out of debt completely and saving up cash, that's where you want to be. The problem is not too many people are there. I haven't seen a survey on that exact scenario, but I'd have to guess it's less than 10% of the entire population, maybe a little more, because you have the top 10%. But if you look at it, even a lot of the top 10% are in debt. But a lot of people use debt to get into the top 10%, right? You take out your first mortgage, the home price goes up if you bought at the right time. Then you sell it, you get the equity, then you get a bigger house. But also a lot of these people that are considered the top 10% are only millionaires on paper. So if they liquidated all of their assets, then they would have $1,000,000. But when it comes to having a lot of money in the bank, there are people that are paper millionaires that don't really have a lot of money, put it in the bank, or a lot of money to invest. 33% of Americans believe it will take more than 2 years to pay off their credit card debt. Yeah, 2 years if you don't spend anymore. So if you stop spending and don't put anything else on the credit card and you continue to make payments, 2 years. But who's going to be able to do that when people are having to put their groceries on a credit card just to survive? People are surviving, a lot of people, on their credit cards. So this 2 years that they're talking about, 33% of the people surveyed said it would take 2 years. That's also way too optimistic in my opinion. I think it's going to take maybe never. The way things are going with the cost of living, the rates, the Fed's talking about more hikes coming up. We haven't seen the emergency rate cuts yet, but what hasn't hit the fan yet? So we might wake up one morning and it will hit the fan. Will it be a string of bankruptcies? Not just bankruptcies, but bank failures. Will it be foreclosures start to increase rapidly? Will it be car repossessions? I mean, what's going to be kind of the kickoff to the next big downturn that everyone is going to acknowledge? It's not going to be, oh, is there, or not a downturn. It's going to be obvious when it happens. Something is going to kick this off, folks. It's going to be It's going to be wild. It's going to be interesting, but it's going to be dangerous too if you're not ready. So I think most of us here are ready. So we're going to wrap this one up. What do you think about the fifth bank failure this year? Here we are in July, a little more than halfway through the year. How many are we going to see by the end of the year? I'd have to say, I'd have to say 10. I think we're going to see the second half be worse than the first half. But then again, we have some of them out there that are going to be rescued, and even when they're rescued, in my opinion, it should be considered a failure. The banks that actually failed or should have failed in 2008, they were bailed out. Technically, they failed. If you're swimming across a lake and you start going under the water and you have to be rescued by, some lifeguards, and then you make it to the other side because you were dragged by the lifeguards, do you call that success? Do you call that, I call it failure. You had to be rescued. That's what these banks are. A lot of them are just having to be rescued. They're only in existence because they're being saved by the lifeguards. The banks are insolvent. They're drowning. So it's going to continue to play out. We're going to keep an eye on it, and we're going to be ready for it. So no matter what happens, come back to this channel, please, and we'll be ready. Everybody keep stacking. Bye for now. Peace.